Go for it, Si.
Hello, everybody, and welcome to episode 42 of Bank to the Future Live. Sorry if we had an awkward pause. I didn't know we'd started, but we are here for episode 42, and we're doing something slightly different today. Today we have a returning guest, which is Joshua, the CEO and co-founder of Vaultoro. And today we're actually going to give some content to those that are actually seeking to raise funding on Bank to the Future and give them 7 tips from a successful campaign which has just closed, which is fresh off the platform. And Joshua is going to share, very kindly agreed to share his experience on each of these 7 tips and how that led to Vaultoro raising over $1 million. I think it was 1.1 in the end, 1.15, we'll check that. When the total funding goal was $700,000. So thank you for agreeing to join us today, Joshua.
It's my absolute pleasure to be back on the show, Simon.
Awesome. Okay, so the good thing about Vaultoro is Vaultoro was actually one of our really early customers when we relaunched very early on when Vaultoro just started. And due to the fact that we didn't get some of these dynamics right, it was a really heartbreaking campaign because it was right in our early days. We didn't have too much of an investor community. Joshua and the Vaultoro team were early adopters. And we'd set a funding goal of $500,000, which at the time, you know, this is when the VCs were just coming into crypto companies. It was a lot harder to raise funding for a crypto company compared to where we are today and where the industry is today. But if I remember correctly, it was really heartbreaking because we raised about 475,000, something that was really close to the minimum funding goal. And we had to refund all of the investors, and we got complaints ever since of people that really wanted to have been a shareholder in Vaultoro. Unfortunately, the rules of the game on our platform is that if you don't meet the minimum funding goal, then the funds are returned. And it was a really frustrating moment, actually, because it was so close to the goal. But then several years later, recently, we just closed a campaign that smashed the goal. And so I think Joshua's got a lot of experience having been involved in a campaign where just the dynamics were not set up exactly and the timing wasn't exactly right, versus even though we're in a very challenging market in crypto right now, a few tweaks and it can be significantly more successful. So what we've got today and the format we're going to go through is 7 tips that we've come up with from all of the campaigns that have ever happened on BnkToTheFuture.com, so that those looking to raise funding, because we do have a very high success rate because we're very selective on the deals that we actually work with. And we're going to go through each of the 7 tips, and I'm going to ask Joshua to share his experience as a client, having run 2 campaigns with different outcomes on Bank to the Future. So Joshua, maybe before we jump into the 7 tips, maybe you got some general comments on the difference in the campaigns.
Yeah, I mean, it was like you put it, heartbreaking at the time. I mean, we were in a bear market as well, which talks to the timing aspect, which we'll go over, I guess. But it was unfortunate, and at the time, because we were such an early adopter of Bank to the Future, we also weren't able to hedge the crypto. So we would see money come in Bitcoin, and the next day it would be worth less and less, and be like, oh, yay, we raised, and the next day, oh, it's gone down. And so it was difficult going against the tide, of the price movement. But luckily nowadays, we do have a hedging mechanism. Although it isn't Tether, it would be nicer in gold.
Yeah.
But yeah, it's that did make it a lot easier.
Yeah, so the hedging one is an interesting one because we leave the pitch owner to make the decision about whether they want to take crypto risks or whether they want to hedge it as the investments come in. And it's a very tricky one because we got stories from both. So, when obviously, when a company raises funding, they've got the accounting of trying to make everything match up with the funds raised, and it can get a little bit tricky if you raised in crypto and you got to mark to market from each investment. While we provide all the data for the company to be able to do that, it's still a bit of a tricky accounting thing to figure out.
Yeah.
But we also have stories. For example, one of our really another early adopter was a company called Coin Payments, who we actually use today for crypto payments on Bank to the Future. And Coin Payments were really, again, it was that time. I think, if I remember correctly, it was Eric Voorhees from Shapeshift introduced us to the Coin Payments team because they were one of the very first customers that integrated Shapeshift at a time when this is, if I remember correctly, this is probably pre-Ethereum. So before Ethereum, altcoins to Bitcoin was a very niche market, but then Ethereum kind of changed the game in terms of bringing more traction into alternatives. But Coin Payments was an early adopter of integrating the Shapeshift protocol so that you could shift between currencies. And they actually raised all the funding in Bitcoin, and they timed it at exactly the bottom of the bear market when Bitcoin was around about $250.
Oh, wow.
They took all of the crypto risk, and they happened to have enough dollars to never have to spend their Bitcoin. And that rode them through all the way through the Series A, took them into revenue. And then later, their next funding round was at, I think it was a $7.5 million valuation. And then their last funding round, when the lead investor came in, it was a $200 million valuation. And that whole thing was funded on Bitcoin price appreciation and having enough dollars not to have
absolutely. Yeah, I mean, if you have the cash, that's a really good story. But at the same time, you want a business that isn't speculating with its future rather than building a solid business that will bring in income. They did get very lucky, but at the same time, if you truly believe in this space, we should be holding part of the funds in crypto, at least a little bit, I think. But yeah, it's always a risk reward thing. Actually, I had a look from the old campaign. If we had kept the future, if it had gone through and we kept it in crypto, we'd be at around about like 20 million or something that we would have raised.
Oh, wow.
So I know, I was like, oh God, yeah.
Wow,
So
that's painful.
that's very painful.
I think everyone's got a Bitcoin pizza story in crypto. So, everyone's got one. There is the opposite. Look at all the ICOs that raised, tens of millions at $20,000 Bitcoin and $1,500 ETH, and they didn't do their treasury management because they raised funding through ICOs, didn't do KYC, had no bank account, didn't hedge with Tether or any of the gold stable coins or anything that's coming up. They're all disaster stories.
They're all disasters. We have on Vaultoro a lot of ICOs, not a lot, but a few ICOs that managed to hedge in gold. So I get emails every so often saying, thanks for your service, that was really useful. But
awesome. And that really is the service of Vaultoro, right? Providing a market solution in the absence of financial technology companies and innovation being able to secure banking.
Absolutely. There's so many clients that really don't have bank accounts because they don't want bank accounts because they're all in fractional reserve and they don't trust that. And there's a lot of traders that just don't trust Tether. They want to go on holiday and they're like, oh, I don't know, if Tether disappears, the bank accounts get frozen or whatever, that whole economy collapses. So they like gold because it's insured and audited. So that risk is just gone for them, that counterparty risk. Well, minimized at least. But let's get to the tips.
Okay, let's do that. So the first tip, we got 7 tips. The first one we came up with is the importance of a lead investor. So to give some background on that, at Bank to the Future, that we found that the most effective model for valuing a company is by having a professional institutional investor or somebody that really understands the market, that does this professionally, set a valuation, put their own cold hard cash in, and then our investors can co-invest on the same terms. The lead investor often does, a bunch of due diligence that our community can leverage from as well. And the lead investor plays a really important role of validating the valuation, not starting at 0%. So what we've seen in the past is perfectly good campaigns. They have failed on Bank to the Future. I think we've got about 5 to 10 over the history. And the reason that they failed is simply because of the optics of other investors feeling fearful why somebody else hasn't invested and no one wanting to be first, and then really looking for social proof that somebody else has invested, because a lot of people don't like to lead that process. So often in fundraising, it's a real chicken and egg scenario, which is once you get your lead investor, all of a sudden more investors want to come in, and it can be a cascading effect. But without that lead investor, campaigns can fail just based upon that. So what was your experience about the whole lead investor concept? I can't remember, did we have one for round one? I think you might be muted, Joshua. I can't hear you.
Sorry, we were all, very new at this thing, including yourselves, when, back in that day, and we didn't know that was the way to go. But, we did well, but it is, like you said, actually it's a problem in general fundraising. VCs also don't want to be the first. They always want to follow someone. And so it's really, really hard to get that first investor that really believes in your product. That is probably the hardest one. And then you can get better investors. And, my tip to everybody out there would be, when looking for a lead investor, look for small fish first. Don't go straight to your Sequoia. Don't go straight to a big VC or even a medium-sized VC. Don't go to VCs at all, I would say. Go to angel investors that are passionate about a project, that want to be really on the ground floor, because they will look at you and say, I really want to support this team, and I want to give it a go. And then you can go to the next investor. And what I would also say is, just with the terms that you close with these investors, just say yes. Just say yes to any term, basically, And then once you've got a bunch of people, you can go back and say, look, do you still want to be in the round? The terms have slightly changed, because now you have a bunch of people, and you can massage those terms and say, look, we're not going to move to Iceland for this project, or whatever the term was, why they would invest. Because some investors, they want, some crazy term like you'll move the whole team to Turkey or something like that, So it's about getting that first one on, and really no one wants to invest when there's zero. So that is a really, really important step. And it also allows the crowd who don't have time, the retail investor that don't have time to do the due diligence as much as they should. Of course, every investor should do due diligence, but a single investor that's looking at you will do automatically more, and you should have everything ready to show for those investors anyhow.
Awesome. Okay, so that's an interesting hack there. Accept any terms and adjust the terms later once you've got a cascading effect. Thanks for that. So then what we always do at Bank to the Future is sometimes we run a campaign that starts at zero and the whole thing gets funded. But the vast majority of the time, we look for that lead investor to validate the round, complete some of the more of the due diligence, and then we'll co-invest on the same terms. So let's move to the second tip. The second tip is we get, so it varies depending on the market. So obviously during, crypto booms, we get approximately 30 applications a day sometimes. On more quieter times, it will be more like 30 a week or something like that. We have a very niche community. We focus on financial technology. We focus on blockchain crypto companies. We're here, on a mission to support companies that are looking to disrupt the traditional financial sector one product at a time. But often we get applications from completely, irrelevant businesses. So, we always say, make sure you understand where you're applying. And for us, it's financial technology, You might have a traditional business that's doing something innovative through some kind of blockchain, but we tend to stick to that niche. But the really important thing, once we've got something in a product, an area that we actually cater to, it's making sure that you've actually got some kind of community built already, and also have built your product. So when Vaultoro come to us, they had a live exchange. They weren't pitching an idea. One of the hardest things for investors, and again, if you're seeking funding, it's about getting inside the mindset of an investor. And investors and entrepreneurs speak very different languages. What I've seen is, entrepreneurs believe that what they're building is going to change the world. They have to be that bullish over what they're doing, otherwise they wouldn't put up with all the shit that comes from starting a business. But they speak a very different language. They don't speak in terms of risk. They always think in terms of reward. They talk about, what they can create here, what can be created, the potential. But most investors think in terms of risk, and they're thinking about, but it's a risky team, or they haven't proven themselves, or what if this, or what if that? And it's a completely different mismatch in language between investors and companies. But one of the risks that you really have to eliminate is investors find it very hard to invest in ideas. Most people think that ideas are what gets you the funding. But actually what investors are looking for is someone to de-risk that by actually having built the product, having traction, proven that there's a market. And your job as an entrepreneur is to figure out how to get through that stage and get to that stage, sometimes without funding. And that is really a test that investors are looking for. So the first thing, obviously, once you've is you've got to build your product, you've got to get it ready, you've got to have something that people can see, people that can test, and a community really of fans that are validating the market. So how would you say the Vaultoro community were instrumental in the success in your campaigns, Joshua?
Yeah, just to step back a bit, I think having an idea and getting investment from pure idea or a white paper only works in total crazy markets where everyone's just got no perception of reality anymore, like we saw in the bull market where people were just chucking money at a white paper. But nowadays, it will, in a normal time, it will only work if you've successfully built and exited a company in the past. If you're well known to execute very well, then investors will look at an idea and go, okay, I'll back you on that. But if this is your first project, don't expect for people to give you money on the back of an idea. You have to build it first. So you have to save up the money or get a team of people willing to donate their time and have sweat equity to really build the product first, or at least a proof of concept. And most investors don't even look at proof of concepts. They really do want to see KPIs going up, key performance indicators. So if you can, and it's also good for you to try and get the company as far as possible without funding, because then your valuation also goes up. But yeah, it's definitely a big tip to have a product. In terms of our community, this has been amazing to have a bunch of people that really love your product and want to see it go further and understand what the product is, because a lot of what we're doing takes a lot of education. Like, why is gold better than fiat? People are like, no, Bitcoin's the new gold, or something like that. But people on our platform realize that, well, gold is better than fiat coins that are not backed by anything. And, that will also fiat also always heads towards its intrinsic value of zero. So why would I hold that? And then there's all these counterparty risks of banks failure and stuff like this. So gold makes sense, but that education needs to come out from the community. And, I think the ultimate really is having some sort of token, because then people are invested in that thing that they're getting to also go out there. But I don't think I think a lot of people have been burnt. So just purely on the idea, if you can get people purely hooked on the idea that you're building and passionate about your team, and you keep them updated, then you'll be on the right direction.
Awesome. Okay, so have a community, engage in a community, have a product that people can be used, and you'll maximize what happens from the Bank to the Future investor community.
Yeah.
You'll often find you'll get new customers from it as well if you're in a financial technology relevant sector to them. So the third tip is both a problem and a really good tip. And that is that you're going to need to have a great video and a great investor deck. You know, the formula for creating a deck is pretty well tested. If somebody gets through the Bank to the Future process, they apply, we'd have a meeting with our investor committee. They'd pitch the opportunity, and if you need help with the deck and the video and all that stuff, then we'd be supportive in that. But with the Vaultoro campaign, they already came to us with a great deck, already a lead investor, and a video that was created to a really high standard. Now, one of the problems in the ICO boom, obviously, was that people got really good at creating white papers and videos, and people were raising funding, you know, tens of millions, just based upon great videos, slick marketing, and great content. That only proves that it works. But if you're actually got a great product and you're actually building something, you're actually here for the long term, and you have a great team, then the optics of making sure that comes across in the pitch becomes really important. So, you know, we've got a community of 85,000 investors. We've got about 6,000 that are more active, that have built a portfolio of an average of 14 companies. And you want you to present your company in the best light possible. And so really having an entrepreneur that's willing to you know, where you can see the white in the eyes of the entrepreneur, the hunger of the entrepreneur, putting his face to it, so you can see, you know, when we're in this investing online process, but when people put their face to their videos, and also just invest the time and care of showing that you're building a brand here, you're building something with nice visual optics, the brand feel is consistent across the products, the website, the investor deck, and the video. Just create you know, a much greater feeling of value, that people feel that there's something more valuable to invest in here. So have you got any tips, Joshua, on how you put together just such great materials?
Yeah, it was you know, when we first started putting together the material, it was very the story, because we actually, Vaultoro is made up of a group of products, right? We have the exchange, we have Bar9, which is like an API for the old school banking system, so they can buy gold really easily, and then also the gold-backed stablecoin. And how do you pitch three kind of ideas under a group? And we initially had the story kind of very disjointed, and we from internally, we read it and go, yeah, that makes sense, that looks awesome. But as soon as we tested that with people that don't have a clue about what we do, they just walked away perplexed with what is this? You know, what am I investing in? I don't get it. So we went back and really looked at the core structure. So we decided to say Vaultoro Group from the get-go. These are the three things under this group. And then we explained the problem that we have for this product, for this solution, and the solution, the problem solution for each of the three things that we have. And this really, and then we tested it again, and we got a totally different response. They really understood it. So getting that down pat, I mean, you can follow the traditional pitch deck, absolutely, and I think that should be a boilerplate. But I wouldn't say really stick to it, because whatever your company is, sometimes you might need to change it so that you get a very coherent story coming through. So it's very, very easy for a person that has no idea about what you do, or even the sector that you're in. I mean, you know, hopefully the investor would know the sector, but you want to try and aim it for really as simple language as possible, and to understand a congruent story and test it beforehand. It was very, very useful to go back. In fact, when we first launched on Bank to the Future, in the second campaign, but first launched the campaign, I went back through it and thought, no, we've got to change it. And that's when we sort of did a last minute change to give this feedback that we'd gotten from independents. So that was very, very key to to a successful strategy that people can easily peruse through it and understand it basically on the first page.
Yeah, I've often said that one of the major problems with our industry is that most people are intimidated by the financial services industry because it's so jargon rich and so complex. I certainly, when I first got into this industry, I was completely intimidated by the technology. I was a finance guy that got into tech. Often there's tech guys that get into finance. And when you have this combination of two of the most intimidating, complex industries in terms of jargon and complexity, like finance and technology, it's very easy to come up with all these different acronyms and jargon and words and just assume that it's part of everybody's common language. And another thing that we tend to do is we tend to confuse people's intelligence in one particular area and assume that they might be just as intelligent in another area. So if we think somebody's an expert in one space, we tend to think that they might also be an expert in this other space. And then we assume that somebody, that intelligent and that smart doesn't need it chunking down and broken down into, because all of these products in financial technology are very niche, very specific, very full of jargon. And half the job is just, helping people understand what the hell it is that you're building in really simple language. Once the way that our brains work is we tend to search for something that we understand. When we're hearing a pitch, we're looking to section it in, like, sorry for the younger people, but file it, as it were, in a filing cabinet or a shelf that we understand. So if someone speaks all this jargon, immediately you're just trying to understand what they're saying. Once you've got a really basic understanding, then your brain relaxes and says, right, I know what box to put them in and what they do. Now I can start focusing on some of the more complex things. But when somebody introduces all these complex products and things and language and jargon, their brain is just trying to say, well, I'm still trying to figure out what it is you do in simple terms. And then once I got that, then I can start trying to process some more complex information. So
I have seen,
Joshua.
Yeah, no, I have read some research, and I don't know where, but a long time ago, about the fact that VCs, I don't know VCs, but just investors, if you confuse them and they walk away confused, they don't want to be confused. They don't want to look stupid. And so by using too much jargon, if you make them feel intimidated, they'll just pretend to know what they're doing and then walk away. And that makes them uncomfortable because they have to pretend they know. And then they don't want to come back to that conversation because, I don't want to go through that. I don't want to look stupid. So by a lot of people, they try to impress with sort of jargon and large words. And really what you want to do is break it down to really, I'm not, LE5's a little bit too full on, but you really do want to bring it down as much as possible so a 5-year-old could understand it, and and then go from there.
Yeah, and one of the mistakes I've seen as well, often guilty myself on many occasions, is thinking that if somebody is high net worth and wealthy and rich, that you assume that they kind of know a lot. And they may have made their money in somewhere completely obscure and different to, what you're assuming. And so if someone, was a very successful entrepreneur, exited their business, has become an angel investor, made lots and lots of money, and then you take the fact that they're rich to assume that they really understand what you're doing, and it's a completely irrational thing, but we tend to do these things and make it over complex because you think, well, if he was successful in business and he's so rich, or if she was successful in business and she's so rich, he or she should understand what I'm saying. And it's very irrational, but we do these things.
Yeah, no, absolutely.
Okay, let's move on to tip 4. Anything on the video, Joshua? Because you did a really great job of the video. What do do you have like your own, you seem to be yourself, you do quite a lot of content. So were you really comfortable with this whole format of putting together small, short videos?
Yeah, I mean, I worked for 15 years at major television networks as a head of graphics and special effects. So, of course, I could jump in front of After Effects and knock together something and do a video. And I do a lot of public speaking, so that sort of comes naturally. But for those that haven't, there are plenty of services out there that do this sort of stuff, and a lot of templates as well. So, find yourself a good After Effects template, and then get someone that's on Fiverr that does After Effects. That will save them a lot of time because they don't need to create something from scratch. And you say, I want to put together something, send them the raw footage of you talking, or even just of a narrator. And if you don't have a voice that's very nice to listen to, then get a professional narrator also on Fiverr. Try to really try to put some effort into your public presentation, because people want to see that something looks expensive, something looks real. Don't go and talk to a camera that's halfway across a roomy room with a lot of echo, and expect people to listen to 20 minutes of you ranting, because it's so jarring on the ears that they won't want it. They'll just turn off. So make it comfortable. Put some nice graphics to it. It takes money to make money, and you do have to put a little bit of time. I'm not saying you have to spend money. If you're very resourceful, you can do it yourself. But just remember, as an entrepreneur, you don't scale. So get people involved that are specialized in that. Save yourself time, and get something professional out there that's outward pointing.
Yeah, and I guess it's easier because the process of creating video, thanks to the fact that we've all got phones and everything, has got easier and easier over time. But at the same time, that does and can also make you lazy. For example, right now, I'm always on the move. We commit to doing these shows every single week, but I know that if I was producing a pitch video, I could do a lot better. I could get a professional setup. I'm just here in the hotel right now, and often I have to just do it wherever I am, and whether it's on a phone or a laptop, which is great because that stops procrastination and you can get a lot done, and it doesn't interfere with your routine, and it allows me to create content while also running a busy business. But yeah, in your pitch video, I think that's the time when you want to put a bit of extra effort in. And it really comes across, which is, I think, why Vaultoro did particularly well as well. So the next one, point 4, I put here, which is be ready with all your DD. DD, again, is, I guess, jargon here in a startup world or investor world for due diligence. And essentially, it's having everything ready so that when investors ask you questions, you're not kind of pulling together all these documents and trying to push together a financial, historical records or all this stuff. Or if someone, needs to do additional, on our platform, we've done all the know your customer compliance stuff on the company and the individuals and the officers and shareholders. But it's about having everything ready, so that when people ask questions, you can fire off things really quickly. What we've often seen on BnkToTheFuture is that the investors, they ask questions on the investor zone. And quite often, a lot of investors don't invest until the investor zone has really filled up with answers. And they often use the investor zone, which is a live forum on the pitch for qualifying investors and the pitch team, to actually it becomes like a live business plan for everything that may not have been covered. And one of the big mistakes I found is that people, refer people and say, just because I covered it in the deck, I'm not willing to answer it again here. But you have to recognize that all investors assume that they are lazy. And by lazy, it means that they're busy on something else. And this is always their last priority. So given that this is always their last priority, because investors always have investment opportunities to invest in, you got to really make it easy for them. And by having all your due diligence ready, having all your answers kind of prepared, it means that you can create this live business plan on the investor zone, which answers all the questions. And quite often, you might be thinking that the investor you're speaking to might just be, someone that you might even think is a waste of time. You don't like the directions the questioning's going. But what's actually happening is for every post, there's another 100 investors that aren't asking any questions, but they're reading those forum posts and they're making investment decisions based upon how you answer them, your attention to detail, how much respect you show the investors, whether you look like somebody that's actually going to respect your community beyond the investment and provide timely updates. So my tip is make sure that you have your due diligence ready before actually, getting the campaign live, so that you're ready to tackle things in a timely fashion and engage with it. So what kind of things did you do in preparation before the campaign to be able to engage with investors?
I mean, we've been running Vaultoro for 5 years, so I'm lucky enough to have answered every question thousands of times, and so I could just go in there and have a conversation basically. But sometimes they throw a swing ball, and they'll ask you really tough questions, and you can't go in there angry or anything like that. Always be courteous. Always, we had one guy had a bad trade, and he was saying, "I'll invest if you reverse my bad trade." And I was like, because he didn't know what a market order was. It just sold all the way down, and it was the early days in the thinner markets, and so I just said, "Well, I'm really sorry, but you don't trade with us. You trade with other people. So we cannot reverse trades." And that sort of allowed us to explain what we do to the investors as well, and say, and say, "Look, I'm very sorry for your loss. Please, we do have a banner saying this is what a market order is. You click here to say you understand what a market order is." So we use the investor zone to, from these curveball questions, which you should be getting very, very good at, because investors, their main goal is to hammer you down, especially if you're talking to private investors outside of the Banks of the Future stuff. If you're trying to find these lead investors, their goal as an investor, and if you're an investor out there, I'd also, this is also important, is that you basically got to drill the entrepreneur. You've got to bring them down a notch. That will also allow them to sort of negotiate the price and the valuation down, because that's what they do. They try to bring you, to your knees, and then they can renegotiate a better price. The important thing is to realize that's what's going to happen to you as an entrepreneur, and be ready and have a thick skin, but also be always friendly and courteous and explain stuff well, because you will get tough questions in the investor zone, and you can't censor them. You shouldn't censor them. You should discuss them and talk about them properly. And like you said, it's really a key. This is your soapbox that you can stand up and talk about the virtues of what you're building, and it also gives you an opportunity to show your passion that's unrehearsed and raw about the project, because as an entrepreneur, I hope to hell that you are passionate about it. So definitely use the investor zone passionately, courteously, and get used to the hardball questions, and really get your team around you to ask you hardball questions beforehand, so you can get ready for them, so you can answer. How to answer them. Of course, with a forum, you do have the grace of taking your time to answer them as well, but I wouldn't take too long. Try to be quite on the ball.
Awesome. Okay, so moving into tip number 5, which is about engaging your community and also media. So one of the things that we do at Bank to the Future, one of the value propositions, is that we have the ability to filter out who can qualify to invest and who doesn't qualify to invest. And so obviously we would like to come from a place where everybody in the world can invest, but securities laws does not make that legal. And the ICO boom showed you what happens when everyone in the world invests. We would love to cater for more people. but we still have to comply with securities laws, and the issuers need to comply with those rules, and then they depend upon us to a certain extent as well to make sure that we're only letting the people based upon their jurisdiction that are able to invest. And that relates down to knowing they are who they say they are. If we're going to be issuing share certificates to these investors, we need to know that those investors are who they say they are. We also need to do a degree of anti-money laundering in order to comply with our rules and regulations as a company and our registrations. And then there's filtering types of investors, categorizing them, making sure that they have been through an online suitability test so that they can demonstrate that they understand the high risk, high return nature of a product like this, and various other documents that we need to do. That leads to obviously a less trolly forum and more people that are genuinely there to invest. But obviously some people can still go through that, and some people can get very excited and passionate when describing and asking questions. But what were some of the activities that you did, Joshua, in order to actually bring some of your community in? So I noticed you were pretty active doing some tweets and some social tweets, letting people know about the campaign, giving updates as the campaign started to reach different milestones and goals. And you're able to do that because we're filtering through and we have a compliant process to ensure that only the right people come in eventually. But also, I believe, as a company that already has an active trading database of investors that are trading between gold and crypto, I should imagine that you also had some of your own community to engage. So what were some of the things you did to bring in maybe new investors to Bank to the Future that were from your community?
Yeah, I mean, definitely keeping people, when people invest, they want to jump onto a journey with you. They don't just want to throw money. I mean, some people do, but most people, they want to join a journey. They want to stay updated. They're excited. They're now invested, or they're potentially invested. So they want to stay up to date. They want to feel like you're reachable. Not personally, maybe not like that everyone, especially in the crowd, you don't want everyone to be able to telegram you, but at least give updates, because that way they understand. So tweets are a great way because it's a quick thing. You can talk, you can do AMAs. Reddit's also good. We didn't do that time. You do have to choose your battles because you can't do everything. What I did as well is I tried to write articles for publications. Reached out to different publications, and we wrote a really nice article about the difference, because I had a lot of about the difference between equity crowdfunding and ICOs, and because I had a lot of people confused, because we're in the crypto space, they were confused, like, what is this, an ICO? Are you fundraising? And so I thought, I'll write a nice article about the difference, and submitted it to Bitcoin Magazine, and they ran it. And then that ended up being duplicated onto Nasdaq.com, because it was a very interesting concept, and I was managed to slot in our sale, our investment opportunity into that article at the end. Of course, it wasn't about us. I didn't, I made it about the differences between that. So thinking outside the square a bit, giving proper, real, genuine content that is interesting for people is really important. So yeah, definitely be ready to write some good content about the problems you're solving, or even, in this case, it was about the issue of fundraising. How do you fundraise without selling some token, and what's wrong with selling a token? What can go wrong? And so I outlined some of those issues in the article too, which you can check out at bitcoinmagazine.com.
Yeah, that was a really great article. It brings up a really interesting point, because it really was, we built an equity crowd, the platform before any of this crowdfunding through ICOs and tokens came around. Many of our portfolio companies ended up issuing tokens. And one of the interesting things is that when they issue tokens, they often give bonus tokens to their shareholders. So you kind of get both from that. But when we had the whole 2017 boom cycle that onboarded so many new people into the crypto markets. And from my perspective, I saw a lot of younger people engaging in investments for the very first time. For whatever reason, they were on a path of traditional fiat debt, but the crypto markets, the ICO boom, and got these younger generation to want to invest and start thinking about savings and investing for the first time. But many of them their very first investment product was investing in an ICO. And so when they started to discover equity later that actually gives them legal rights, certain entitlements, and is a more seasoned product, they really didn't understand the difference between the token and equity, because they thought when they were buying these tokens that they were buying like a share in the company or something. And they didn't realize that they were, buying a token which was for the utility and the network effect. And actually investing in the company is done through equity. So it's really important to get that clarification in a day and age when, there are some incredibly wealthy people in the crypto markets that are very new and young to the markets. And they only really entered the market in 2017. They did incredibly well if they got out before the crash. And now they're, trying to figure out the difference between equity and tokens, and all they've ever experienced was these ICOs. So it's really interesting.
Yeah, it's that's why I called it the long lost art of investing in equity.
Yep. Okay. So tip 6, we've kind of covered as a bit of a follow on, but we can take it in a different angle, which is committing to engaging in the investor zone, but more importantly, investor relations. Now, this is one of our pet problems at BnkToTheFuture that we're always seeking to solve. And that is that you have people that are incredibly engaged during their funding round. They get the funds in, and then they really focus on business execution, which is exactly what they should do. At that time and that moment, funding was their number one priority and goal. Next, they've got to take that funding. They're going to have a load of legal work, a load of accounting work, a load of, they've got to take that money. They've got to allocate. They've got to do HR. They've got to do staff. They've got to bring in new technology. They've got to do onboarding. They've got to build new systems, new processes. The list of things that one has to do in order to scale and grow a business, especially when you might be earlier stage and you're new to this process. And so therefore, sometimes either there are people that just genuinely don't care about those investors, and we try and filter for those. But there are others that really care about their investors, but it's like there's only so many hours in the day, and there's activities that drag you away every day, every direction in business. You got all your staff problems, you got all your financial problems, you got all of these problems, you got your tech problems, you're trying to prevent hacks, you're trying to prevent, you're trying to make sure your security is tight, you're trying to do your compliance, you're trying to do your financials, and every single day is like a battleground in trying to build and scale a financial technology company. And often investor relations hits the bottom of your pile, and that's a really huge mistake, because what we've often seen is that some people, when they engage their investors at least once every quarter, and then when they got questions on the investor zone, it turns private, and then you can answer their questions. We've had some, I'd say one of the, I'll call out one of the best investor relations that we've ever had was a company called Exodus, a wallet. And every quarter, they provide their nice investor update. And then when the questions build up, they take some time and they allocate some time to actually, answer some of those questions for those investors. Now, they haven't needed to do another funding round since, but when they are ready, there's a completely engaged community that's ready to reinvest again. And we've seen this on multiple occasions. And the ones that don't do that, they suddenly show up when it comes to the next funding round, and suddenly no one wants to invest again from the poor experience they've had from previous communication. So it's a real challenge, but you just got to dedicate some time to making sure, get the investor relations right, and the investors will look after you for future rounds. They'll be your advocates. And they do understand that you are incredibly busy and you're trying to juggle a million balls all in one go. But if you can continue with your investor relations, it pays dividends many times over. So Joshua, I mean, this obviously will be the previous campaign. There were no investors that came from that. I'm assuming you took on some other investors, and now we encourage everyone to provide that quarterly update. It's a real asset for future growth and next funding round. But have you had any experience of investor relations, and whether some repeated into this round because of good relations in the past?
Yeah, I mean, what's really important is not only talking to your investors that actually invested, but keeping a list of investors that said no is also really important, and keeping them updated, because they might say yes next time as they watch your KPIs go up. So it's one of the most important things, because at the start you hopefully won't raise too much, because you don't want to give away too much equity at the start. So hopefully you'll raise enough to build your KPIs and then be able to have a much larger second round. So yeah, it's always important. One tool that I found really, really useful is a tool called Streak for Gmail. Streak allows you to build really nice funnels. We're not sponsored or anything like that. It's just a really good tool. So yeah, that was really useful, and it allows you to send out mails to a lot of people, not too many, but like a nice group of investors that said no. But yeah, especially go back to Bank to the Future. Keep the investors that actually invested updated. It is for the feedback that we got is that once an investor is invested in you, the endorphin rush that they get from getting an update is quite strong. They're really happy to hear from you, because they've put their hard-earned money in you, and they want to see that you guys are doing something. Monthly, quarterly is really great. But I would also say, if you have the update, if you have a change log, let's say, if the stuff that you've built this month, just a simple change log. Doesn't have to have a big rambling thing or talk about the finances or anything like that. Just a change log of your actual product. Chuck that in there as well, just to keep interest in what's going on. But yeah, the main thing is financials. Of course, investors want to see financials. So quarterly, you should be keeping track of your financials anyway, because otherwise, how the hell do you know how your business is going? And just be able to, sanitize that for the investors. You don't want to have everything public just yet until you go full IPO, but definitely keep the KPIs. Even if they go down, that's fine. You just need to say why. Most investors will let things slide. They're not too precious. They just want to know what's going on.
Yeah, and another tip I have as well is engage investors when things are going badly as well. They do appreciate receiving bad news, because they don't want it to be a surprise. So one of the best at this is Shapeshift. They've, in their story to getting where they are, they've had hacks where they've lost money. The founder actually ended up covering the hack, but he gave a full report to the investors. And really transparently gave, a real up-to-date of the disaster. And the investors are really forgiving. They don't mind when things go wrong. They'd obviously like everything to be right all the time. But what they hate is being kept in the dark and not being told about it. They also had their challenge when they had to shift their model from, really pushing a no KYC model to having to adjust to regulations and KYC.
That's a tough one.
That was a really tough one. But they kept, they kept their investors up to date. And yeah, there's upset people, but just face it head on. Because people really appreciate the honesty of not just sharing all the successes, but all the failures and things that go wrong that inevitably happen in business.
Yeah, and investors know this. Investors will never, it just never happened where a startup had no hiccups. Startups have hiccups. They need to pivot, or they need to do something. That's why people talk about investing in people. They don't invest in ideas or the product necessarily. Of course, that's of course has to be part of the equation, but they invest in people that can deal with the downs. as well as the ups, because there's far more downs in startup life than there are ups. It's always a battle. So and proper investors know this. So don't be scared of sharing those times, because especially if you can explain what lessons you've learned from these hiccups. Say this month we had this problem, and a huge, currently we have a DDoS attack on the system. This is a normal part of not only an online business, but especially crypto exchanges. They just get ransom notes saying, if you don't pay this, we'll DDoS you, we'll point our botnet at you. It's just a hassle. It doesn't really, all funds are safe, but talk about what you've learned from that. So currently we're learning how to adjust our new system, which was built from the ground up, because Vaultoro 1 had everything in place to deal with DDoS attacks. The new system's built from the ground up. We're learning where people, what we can do to mitigate those, and soon that won't be a problem, hopefully. But yeah.
Yeah, and we see ourselves as a strategic investor at BnkToTheFuture.com. We're not just here trying to put as many funding rounds and earn as many commissions as we possibly can. We're here to build the industry and support the industry. So if any of our portfolios come to us and tell us about all the great things, which is awesome, we love to see that, and we love to get that. But if they don't tell us about any of the problems they're having, then we have no solutions for them. So the amount of our portfolio companies that have come to us with a very specific problem, and I've been able to, or our team's been able to introduce them to the resources and the solutions to solve that problem. And so, if you don't share your problems, then you can't tap into the number one reason and benefit other than money of having all this number of investors. So let's move over to the final one, and that is tip number 7, which is engineering the campaign to succeed by having a realistic funding goal, a valuation that allows for upside based upon where you are, and really setting the campaign up to win. And more than that, having a general funding strategy that goes beyond this round. So as Joshua pointed to earlier, that you don't want to sell too much equity early, because this will be the cheapest equity you'll ever sell, unless the company is not doing too well and you have to do an emergency down round, which we have had some companies had to do, and that's a situation to be avoided. But ideally, you're always doing an up round, because you're leaving enough time whereby the value of the company is going up as a result of the funds that you brought in, and then you can bring in more funding at higher valuations. That creates pricing events for investors, and investors love pricing events. They love to know that the price of their shares is gradually going up with each funding round, and by selling more equity in the future, you get to reprice the company, and and investors then get to see some of the gains that are being made on paper in this path towards exit, secondary market listing, security token, IPO, acquisition, MBO, whatever the exit might be. But think of it in terms of that. And Joshua has no more experience than anyone of the pain that can come when you just slightly get the funding goal wrong, and when you get it right. So I think we already covered that, but have you got any comments on that strategy?
It's a fine line, because you don't want to be you don't want to make it like $20 above what you got, so yay, we'll just get everything, because that also doesn't give you the oomph to try and make it. So you want to put it far enough away that you feel like, yes. And at the end of the day, it's not about trying to just get money in. You as a company need to make a plan about what is the minimum, and what can we succeed with that minimum. Because if you can't succeed with that minimum, whatever success means to you, whether that's getting to another funding round or actually being profitable or whatever, if you can't, then there's no point even trying, because all you're doing is basically ripping off your investors, because you get way too little in, and you've reached the funding goal, but you can never reach anything from there. So make sure that you do your paperwork, find out how much you need to actually become get to the next funding round, or become self-sustaining, and make that your goal. Of course, sometimes if you can have a middle section in there or whatever, but it's really important to make sure that you reach that as a business person, that you feel comfortable with that minimum, because if you don't reach that minimum, like I said, then you'll just put yourself in a world of pressure, because your business can't sustain itself past whatever you've raised, and all your investors that you did get won't trust you as an entrepreneur anymore, because, well, we invested in you and you never got anywhere, and that was because you put your minimum too low. And the other side of that coin is, don't put it too high, because oh wow, imagine if we got 4 million in, and you're a young startup. Look, yes, it'll be great because you won't need to raise funds again. B, it's not that good because you have to sell way more equity than you need, but also because if I see a company that's raising far too much money, and this happened a lot in the ICO space, then I'll think, well, this will never get done because the founders are now, got enough. They're fat and not got any hunger left to succeed in the project. So this is why tranches exist, actually, in the VC world, is to make sure that the founders don't just get everything up front. Like we raised €1 million, Bank to the Future. That for us, our funding goal was 700. We raised $700,000. We reached 1.12 million, and that was amazing to get above the minimum. So we had a minimum, and then decided what would happen if we raised above that. Where would we be able to go from there? And of course, there's you can always spend more money, but you can't. It's sometimes hard to spend less. So set yourself those minimums are really important. The maximums are really important, and see where you can go in the middle.
Okay, so I think that's a really good place to close out. I think we hogged the whole hour for me there. Do you want us to close off here, or do you think we should take any questions, or should we end
We can take some questions for sure.
Yeah, sure. If you guys are okay with that.
Yeah, sure.
Yeah.
So there was a question that came through about Dash. Joshua, you mentioned using Dash and stuff. So somebody asked, why was it not possible to use Dash to invest when Vaultoro uses Dash and Bank to the Future didn't allow it, or did allow it?
This had to do with the hedging solution. We chose to hedge in the crypto straight away in a fiat base, because if there was an option in gold, I would definitely have done that. But I'm a big fan of not having to gamble the company's funds on speculation. If I was in a total bull market, maybe I would have done a little bit differently, maybe. But we learned from our last time that we're here to build a solid business, and I want money to come in from a good business structure rather than getting lucky on Bitcoin or Dash. And Bank to the Future, correct me if I'm wrong, Simon, but if you do decide to hedge, it's just Bitcoin and Ethereum. But if you keep crypto and you just have crypto, then you can use Dash.
Yeah, so we've got a few payment methods. We definitely need to upgrade them because we haven't looked at them for so long. But if the company's willing to accept currency risk, then you can accept Bitcoin, ETH, and dollars. And we do have a suite of altcoins so you could invest Dash to a certain level of liquidity and it would auto convert into Bitcoin. But we haven't built a altcoin auto convert into Tether or a hedging strategy yet. So that's on the roadmap somewhere. But we haven't seen the major demand. Most people are comfortable at this stage of, if they've got an altcoin, they can figure out how to get it to Tether or Bitcoin or ETH rather than having to spend it directly.
Yeah, I mean, it is unfortunate. We would have liked to have the Dash community more involved, but yeah, I mean, we have had some Dash people, like you said, Simon. They converted it to BTC and then invested like that. But yeah, I mean, this is why we have to support the platforms so that we can, like Bank to the Future or Vaultoro, is that we can continue to add features, and it's not just as easy as just switching on a switch. There is a lot of back end stuff that people don't realize when adding different coins. So yeah, it's definitely important to keep supporting businesses like ours.
Okay, so another a question on raising finance, actually. So what are the basis of valuation of a company usually?
The basis of valuation changes a lot, depending on the founder. Is the founder someone that's already done some amazing projects? Like if Eric Voorhees started another project, the valuation would automatically be a bit higher than someone coming fresh out of school. There's also income or revenue. If usually you take the revenue, I think, I don't know, correct me if I'm wrong, Simon, but you kind of sort of triple that per year and say that's kind of where we're sitting. Of course, some places the revenue isn't there at all yet, and you really are just building a community. Like Facebook really didn't have any ads when they started, and they were just building. So it's based around KPIs and what they feel the lifetime value of a customer is in the future. So these are all different variants of sellability. How much can you sell these ideas that the valuation is there? But at the end of the day, the valuation comes down to talking to a hell of a lot of private investors beforehand, seeing where they're comfortable with, and the market will give you the valuation after a while. Of course, as the entrepreneur, aim high up front, but be negotiable. At least say if someone rejects you by saying the valuation's too high, ask them, well, what valuation do you think is fair? Just to get a feel. You don't have to say yes or no to that valuation, but at least you get a grapple of what other people are. Because at the end of the day, it's the market that evaluates you.
Yeah, so back to investment banking days, we used to use multiples and discounted cash flow models, where you would take a percentage of revenue or you would apply a multiple effect. But it only really works for more established companies with regular revenues and regular cash flows. So when it comes to earlier stage companies, the only approach that is actually effective is an asset-based approach. And by asset, I mean intangible assets. So Joshua mentioned the reputation of the founder. That doesn't sit on the balance sheet as an asset. It's an intangible asset. It's the number of users, your KPIs. That may not sit on the balance sheet but it's still an intangible asset. So really what you're doing is you're looking at a business and you're making an assessment of, what level of assets do they have? Okay, they've got a platform that's got traction. They've got a great credible team of founders. How much do we place on that? And then you really do some kind of comparables to other companies that maybe are more successful. So you could look at one of the most successful companies in our industry is Coinbase. They've reached an 8 billion valuation. So you can say to yourself, well, the upside of the market based upon existing thinking is to get to Coinbase status of $8 billion if we create a similar growth and traction curve. So therefore, where are we at our stage? And you might be, early stage, you might be sub $1 million for, an idea. Or you might be at the $5 million valuation. It's just comparables. And as Joshua said, at the end of the day, it's the price at which a buyer and seller are willing to purchase your equity in exchange for the amount that you need. And that's why we look to the lead investor to set the valuation, and then we co-invest on the same terms. There's no easy, simple answer to how you value a company. That comes later.
Yeah, and one mistake I have seen people do that are really new at this is that they say, well, we're disrupting Uber and Uber's worth this much, and if we only get 1% of that, then, and which is very conservative, then we're valued at that. So that's ever, and you just think, no, that's
Yeah, the old, if we can just there's 1.4 billion people in China. If we can get 1% of the Chinese market, then we have made X amount of sales and we're worth X billion dollars.
Yeah, no, don't be saying that to any investor ever.
Okay, so the next question I have, and then after this, I might have one more question depending on how much longer you guys want to go on for.
You mean how much we talk?
Yeah, that's it. But I didn't want to say it. Do you guys have a strategy to work with companies to convert their utility token into a security token, meaning they can use their utility token to buy into equity in the company? So I think that's directed at Simon.
Yes, the answer is that, so as we evolve our security token ecosystem, we plan on having trading pairs for the BnkToTheFuture token versus the security tokens that we're looking to launch on our security token exchange. But I think this is a really interesting area that's going to emerge out of the ICO boom stroke STO market or wherever we go next. So, you know, the best use case we've got of doing that was when we accepted the Bitfinex security token for the hack recovery, and allowed people to convert it into equity. And I think we're going to see a lot more like that. Certainly with the BnkToTheFuture token, we're looking at how it's going to interact with the security token ecosystem. And I think it's going to be a genuine, really good use case for some of these utility tokens, is to be able to make markets against some of the security tokens.
Okay, cool. I guess this last question will be at Joshua. Would be good to know what Vaultoro plans to do with the 1 million they raised.
Yeah, so really the first challenge is to start getting more customers in. But at the end of the day, we're growing. This is to build the Vaultoro 2.0, which is the multiple asset exchange. You know, Vaultoro 1 was just Bitcoin and gold. To fully launch that, and we sort of soft launched it at the moment, and to do a full launch on that, and that includes, of course, a marketing budget to do more programmatic marketing. We're really pulling back on some of the marketing methods we've used in the past and going more programmatic, more database stuff happening. So there's that. There's also the legals behind the V-Gold, or the tokenization of the gold, which is almost pretty much done, actually. We've spent a lot of time with the DWF, which is the major law firm dealing in crypto and blockchain assets here in Germany. We're also talking with Nägler in Liechtenstein and Switzerland about the legal cases there. You know, ever since Facebook came along and dropped that massive bomb that they're going to jump into the game now, that really got the hair up on a lot of legislation to say, like, oh, you know, oy. It wasn't the frog boiling slowly, but the boiling water with you know, Facebook came along with a full boiling pot ready to throw the old financial system in, and that of course was very scary. So there was a lot of quick moves within German legislation. So we're basically adapting what we spent a lot of money on before the funding round, which is some of the legal cases, and that's not wasted because we've really done a lot of legwork in that. But that's definitely a cost. And then the Bar 9 API is basically, you know, banks, they have a very long sales cycle. It takes a long time for them to implement new technology. We are working with quite a large banking partner that will allow us to reach out to their banking partners. So there's a lot of biz dev which takes time and money, but this will allow us to implement Vaultoro Gold into Vaultoro. There's also market making when we do launch the V-Gold to be able to put that onto other exchanges, to be able to sell that gold on other exchanges. So, you know, there's a whole gamut of things. There's also some R&D on Lightning, on the RGB network. We're looking at doing a little bit of R&D and putting some money into the open source community as well, to make sure we have this technology to move forward with tokenized non-fungibles on Bitcoin Lightning, which is a very interesting topic, and there's a lot of great minds sitting behind that. So yeah, there's a bunch of things that we'll be doing. The main thing is to get our KPIs up on the exchange, because we feel like the exchange is kind of the hub for everything. that we're building. It allows us to have liquidity. Also, updating the referral program. So we're going to have a really wonderful referral program to start with, where you get a 0.5 gram of gold for referring someone, and someone that you refer to also gets 0.5 gram. Plus, you get a revenue share of the fees that they make as a trader. This will be just, not a. This won't be forever. This will just be a promotion. But I'm really, we saw our KPIs from the last Vaultoro 1 was really a lot of the users that came on were brought on by other people using the platform. So by incentivizing that further, I think we'll get a lot more. So some of the money on that, but yeah, that I guess goes back to the marketing.
Okay, brilliant. So I'd like to thank Joshua for taking time out of his busy schedule in order to provide tips for other companies that are looking to raise funding, and also providing to some of the investors that are in the new funding round that we're about to close, an insight into how Joshua thinks and what's up for Vaultoro. So thank you very much for your time, Joshua.
It's absolutely my pleasure, Simon. Thank you very much.
I just wanted to let you both know that actually there was some really, really good feedback in the live chat, and everyone's just basically thanking you both. So thank you, Joshua. Actually, yeah, it's been a really good episode, actually. Yeah.
Oh, wonderful. Thank you very much. Yeah, cheers.
All right. Well, thank you, Famila, as well, for moderating the live chat and doing everything to put this all together and make that happen. So that's going to do it now. I will close out with one, I guess, bonus tip for those of you that are seeking funding and a way to actually think about. And that is tip number 8, which is the funding goal is a nice celebration along the way, but the end goal is to actually make returns for investors, and investors will love you forever. If you actually follow this all the way through, make returns, and the success is when you make returns for investors rather than securing the funding. So that's going to do it for episode 42 of Bank to the Future Live. We look forward to seeing you at the same time next week. I believe we've got Carlos from Securitize, who have been doing some really great stuff in the security token space. And so we look forward to seeing you next week. Thank you, everybody.